Welcome to Unblocking the Chain. My name is Michael Printable and I'm your host for today. I'd like to welcome Menners, who's here. We don't have Drew, but Menners, welcome.
G'day, Critter. Great to be with you.
Good on you, mate. Great to have you. And we have a special guest, really an OG of sorts from the digital asset space. His name's Will Hamilton. Welcome, Will.
Thank you, Michael.
Will's the Chief Commercial Officer of DigitalX, Australia's publicly listed blockchain technology company. Will brings a wealth of experience in corporate finance, capital markets and Web3, having held senior positions at Animoca Brands, Trovio Asset Management, and earlier in his career at Pattinson. Since entering the digital asset industry in 2016, Will has been instrumental in managing and raising institutional capital for a range of blockchain and crypto ventures. Most recently, he's played a key role in DigitalX's strategic $21.6 million placement, bringing powerhouse investors like Animoca Brands, UTXCO Management, Parafire Capital to the table. Now, as the CEO, Will's leading DigitalX bold Bitcoin first strategy, driving the company towards its ambitious 2,100 Bitcoin vision, a goal to hold 2,100 Bitcoins by 2027. Will, that is a bold statement. But before we get into talking about the DigitalX strategy, give us a sense of where you've come from and how you came to be involved in the digital asset industry.
Yeah, so I started my career at Ernst & Young.
Yep.
Realised I wasn't getting paid enough there for the work I was doing, and ended up moving to Soulpats in their internal private equity team. So Soulpats is basically a kind of a miniature Berkshire Hathaway but of Australia. Obviously nowhere near of size, but everything is investable from balance sheet across venture to coal mines, publicly listed companies, all up and down the stack. So I spent 2.5 years there, which in hindsight was honestly one of the best gigs I've ever had. So no pitching. It was a brilliant place to work. Guys there were great. I think that company now has grown to like 13 billion under management, but it was at that time someone introduced me to crypto, and he stuck his head over the side of the house where I lived in, and he said, "You look at this thing called Ripple. It's gone up 180%." I had no idea what it was at the time. Anyway, that was the start of things, and this was in around 2016, where all the major exchanges were like Poloniex, Bittrex, BitMEX, etc.
It's like a beta honey. You know, you going towards the big returns.
Not quite. It didn't quite end up that way, but that was kind of my forte into the space, and then took a bit of a break, and then ended up at Trovio, or at the time was TCM Capital, with Steve, John Dean, and Bob Tucker and the like. Yep. Which I believe you guys now have subsequently bought out.
The Trovio Asset Management. Yep.
Yeah.
Yep.
So when I joined there, I helped them set up the market neutral fund there, as well as their small venture fund, and helped out with the systematic kind of beta product, and did quite a bit of work around the DD, building up the kind of corporate due diligence structure around the funds.
Yep. Yep. And then, okay, so let's focus on Trovio just for a second. You were there in December 21 when TCM and Trovio merged to form the $200 million crypto firm. There's an AFR article with JD looking trim, taut and terrific in it.
Yeah.
So what was it like when that was happening? I mean, that was almost towards the height of the 21 boom. It must have been good to be at the firm then.
Yeah, it was good, and then not all good things last forever. But it certainly was a very interesting time because of so much interest that had just sparked up from institutional capital wanting to get into the game.
Yep.
Well, I think we ended up raising like about 100 million Aussie for the market neutral fund out of a group from New York.
Yeah.
But at the time, DeFi was so new relative to traditional finance governance and institutional protection layers. So, we were sending quite a lot of money through Trezors and ledgers and stuff. We had to build our own processes around that to make that institutional worthy. But the likes of Fireblocks and I don't even think Copper existed.
Yeah, that's right. That only came as a result of the crash. That technology.
So we had to build a lot of our PMS systems, monitoring of P&Ls and deltas and all of that kind of stuff. But it was certainly an interesting time. And look, at that time, it was kind of like you could throw money at anything and it would stick.
Yeah.
But then obviously that changed pretty quickly.
Yeah. Okay. So let's talk about so the end of 2022. Obviously, we had the FTX, Celsius, Voyager collapse. Crypto changed. There would have been a lot of stories, from that. What experiences did you take from that roller coaster ride, so to speak?
I think trust and counterparty risk was probably the biggest one. So we had exposure to UST, which is the Luna algorithmic stablecoin, effectively.
Yep.
In that market neutral fund.
Yep.
Luckily, only drew down about 4%, but we did have some exposure.
Yep.
And I think, all the Celsius, the Voyager, all of those companies that took a hit just kind of set the industry back quite a bit in terms of trust, regulations for sure, in terms of how regulatory bodies viewed crypto in general, particularly DeFi.
Yep.
But in saying that, I do believe what it actually has done is because the regulators have kind of been like, we're going to let you guys blow yourself up, it's actually allowed a free market to exist, which in my view, in traditional finance, free markets don't exist. If there's an issue, the Fed comes in, backstops it. If Silicon Valley Bank is going down and all the FDIC limits are hit, well, Janet Yellen stepped in and plug the gap where they shouldn't. So what that does is it incentivizes people to not act and evolve in the correct way and learn from their mistakes. Whereas in crypto, you've had these events where these people have blown up. No one's come to save them. No one's come to plug the hole. And you've actually, you're starting to see an evolution of the market where good actors are learning from previous behaviors and understanding that there's no white knight coming to save your butt at the end of it.
I mean, it was a rebirthing, wasn't it? Because all of the counterparty risk forced new tech to emerge, like the clear loop, so copper clear loop technology, and the Fireblocks off exchange, and really that solved counterparty risk. And it's probably, I'm sure you were like me, where when that technology started to come through, that was when my resolve in the industry really started to strengthen. And I've got, this is something that will underpin finance in the future. It's just, the adoption of it is taking time and it is coming through now. But it certainly was a critical period. And like you said, crypto adapted to it. The market adapted. And now it's come out a hell of a lot stronger than what the traditional markets are. Yeah. So, it's an exciting time going forward. Okay, so let's move on. You're at Trovio Asset Management. In 2024, June 2024, you joined Animoca Brands. Give us an indication of what was going on there. Obviously, they're a massive company. They raised money at a $4.5 billion valuation. They've got, a hell of a lot of investments in a hell of a lot of different, Web3 projects. What was it like being there?
Yeah, super interesting. So it was kind of another side of the coin I hadn't quite experienced in crypto. So previously it had purely been asset management side, DeFi protocols, and running money through various strategies. Whereas at Animoca, it was more on the capital markets side, so raising for projects. But I actually worked quite closely with Simon Doherty up there, and did a lot of the restructuring for some of the portcos in underneath the Animoca brand. So using some of the old corporate finance skills I'd learned at Soulpats, but also having an understanding of how things actually work in the crypto space. We also did quite a bit of M&A when I was there. So I helped with one of the main transactions for their flagship project called the Mochaverse project, which basically they bought on another chain from a different provider to allow for the decentralized distribution of identities and the ability for one to build up one's reputation. So basically, imagine your personal actions throughout the entire day, whether it's like, for example, you're flying back to go see the Dockers, right?
We love the Dockers.
Yeah. That's a massive ask, right? Going to Perth from here at 5-hour flight.
Yeah.
But how does that ever get captured by the Dockers? The Dockers aren't going to know that.
Ugh.
And
I know. I should be a VIP.
and that basically can't be monetized. So what the Mochaverse is trying to do here is monetize the engagement of an individual in what they do in their life. So I'll use that as an example. The Mochaverse in this situation would be able to, or the Dockers would be able to see that you have made a commitment to fly back to Perth, or that you regularly attend all these Dockers games, and your data would sit on chain.
Yep.
The Dockers would be able to sequester that data for a fee. Part of that fee would get paid to the Mochaverse. Part of it would actually get paid back to you as an individual. So they're trying to create this loop of a symbiotic nature between the advertiser, or say the club, the individual, and then them as the kind of middleman that facilitates the entire thing. But this can go from where you drink, where your local bar is, to your footy club, to it can be anything. So
I would take my rewards with a signature from the Prancing Pony. That's how much I like him. The Voss who plays in the forward line for the Dockers.
Okay, well, I probably can't help out with that, but it's good to know.
Let's get it on chain. Okay, so they've obviously got a big presence on the on the treasury side as well, and that's generating a hell of a lot of returns for them. After having been there, they're striving hard to I guess dot the I's and cross the T's, the best way of putting it, and IPO at a point in the future. If you had to guess, where would that IPO be? I know where they would like it to be.
I said, but if there's going to be any curveballs, if I had to guess, look, I couldn't put a date on it, but I would just anecdotally, you would want to do it when the market and the regs are hot, and I would say particularly in the US. So you're never going to get. I doubt you're going to get a more favorable administration right now in the US, and assuming Trump is alive, even though Twitter said he was dead for 2 days, about a week ago. Yeah. If he's still there over his term, well, I would think it would make the most amount of sense to do it in the next couple of years.
No, I tell you, the Circle IPO has certainly got everyone, talking, and for the first time, the M&A divisions over in the States are. They're not going on holidays because everything's alive. Yeah. So, it's good to see. Okay, so let's move on. You are now the Chief Commercial Officer at DigitalX. So give us a sense of what's involved in that role.
Yeah, so I've come in there. So I work primarily on that transaction with Animoca. So Animoca basically got a mandate from UTXO and Parify to say, find us a treasury company that would be applicable for us to invest in Australia. So the Nakamoto Group, UTXO, we don't have a direct investment from Nakamoto, but UTXO and Nakamoto are quite closely tied. Nakamoto Group is the David Bailey Group. They just closed a $700 million round for Kindly MD on the NASDAQ, and I think are looking to raise $8 billion through a ATM at the moment to distribute to their portfolio companies. But their overall objective is to find companies in different markets and jurisdictions where a digital asset treasury for Bitcoin only makes sense.
Yep.
So they've got one in Amsterdam, obviously one in the US. I think Smarter Web is one of theirs in the UK, and DigitalX has been their choice in Australia. So I really spent a lot of my time running that transaction here in Oz. And then it just made a lot of sense for me being in Sydney and DigitalX having a presence in Sydney to make the move over. And I have been kind of working from home for the last 4 years, which has been driving me insane.
Yeah.
So a move out of their house has been welcomed. So.
Very good, mate. So for the punters out there, I know Manners likes me to keep it focused on our following. I'll just give you a quick sense on DigitalX. They're listed on the ASX. As of July 2025, they had 104 million of digital assets on their book, primarily consisting of Bitcoin and Sol. We know that DigitalX did a deal with Sol Strategies. We'll come to that later on. Currently, their share price, it's after the raise, the share price raced up to 13 cents. Okay, and everything was looking good. And with all these things, you sort of need the price to remain relatively solid. Now the market cap of DigitalX sitting around 100 million. So what needs to happen in the future is perhaps it needs to trade at a premium, a little bit like MicroStrategy, or what's now called Strategy, to participate in a lot of other different products. But we'll come to that in a sec. Give us a sense on the bold 2,100 Bitcoin vision.
Yeah, so as part of this transaction, the company has effectively transitioned from a Solana staking business that Sol Strategies was like to a pure BTC play.
Okay, so no Sol anymore.
So there is some locked Sol still sitting on the balance sheet, but as part of the mandate and the plan is to roll that off the books, and that will go into Bitcoin. My view on all of these DATs, on these digital asset treasuries, is I would only have done it if it's Bitcoin only. I think purely from the reason you might get some rips in some other Ethereum based, Sol, etc. But my view is that technology always supersedes itself. So the question is when. Whereas BTC solves one problem that doesn't just exist in a siloed economic situation or in a particular sector of the market. It solves one issue that every single country in the world faces because they all run on the same economic framework and rails of central bank, government, deficits, surpluses, which effectively always leads to and a complete misalignment of those in charge and the incentives that they are aligned with, which ultimately leads to higher debt loads, the debasement of money. Like, look at a couple of years ago, about a year and a half ago, when you started to see the Fed hike rates and gold went up. That has happened in the past for very small, short windows, but absolutely not like the prolonged situation that is happening now. And that was kind of the canary in the coal mine for me to show that, this whole narrative around BTC as an inflation hedge, it certainly didn't play like that in 21. That was just basically pure NASDAQ. But I can see that coming to fruition now. And so Bitcoin being the primary asset as a digital asset treasury company, I think has extreme relevance. And I don't actually think that the market, particularly traditional markets, quite understand what that is going to look like in 3, 5, 10 years, where the US are just going to keep running it hot. Real growth is still minimal to potentially negative once you take into account actual inflation. And particularly if you measure it from how inflation was calculated in the 80s. If you look at like shadow stats or true stats, these numbers around CPI, frankly, are rubbish.
Okay. Okay, so DigitalX and, for instance, yourself are zeroing in on Bitcoin,
Yeah.
being the best store of value in the digital asset space, the OG of sorts. Really, there's in terms of the history of DigitalX, they had a number of strategies going and a number of different businesses within the company. So is it fair to say that you're zeroing, or the company is now zeroing in on not just building the balance sheet 2,100 by 27, but also enhancing the Bitcoin ETF, which DigitalX has?
Yeah, definitely the play here at the moment is to build out the company's balance sheet to 2,100 through accretive dilution across the entire capital stack, from convertible debt to at the market issuances at certain MNAVs. We're looking at things from Bitcoin-backed convertible debt, which takes out the tail risk of, if it doesn't convert, then you just pay back the Bitcoin, versus traditional convertible debt where you may be on the hook for a lot of money when BTC is in the hole.
Yep.
That could spell trouble. And also, look, I think really where the money is at here, and particularly in Australia, given the pension pool here, which is the fourth largest in the world, is the pref share market. And it is, to some extent, basically rolling out what MicroStrategy have done. They've basically built out a yield curve for all their products.
Yep.
And they're just sucking money out of the debt system.
Yep.
That's kind of our long-term goal, and also, trying to keep this ETF going and getting more institutional demand for it.
So I guess for the MicroStrategy strategy to work, the stock has to trade at a premium. It got up to over 400% premium to its Bitcoin holdings. The move over the next whatever period will be trying to get DigitalX share price up to trade at a significant premium. So there's obviously strategies involved in doing that, but it sort of will require everyone getting on board, and investing in the concept of what you're trying to build.
Yes.
And so it's nice to hear that it's a pure concept, that it's really just focusing on the one strategy, and that strategy can be a significant strategy if you can issue structured notes, whether it be for instance out of the money or at the money, for instance like MicroStrategies don't. So from here, my question to you is how do you how other than coming onto the podcast, what would be a strategy in terms of how you get the stock up?
Yeah, look, I think right now, given the shift of this strategy recently in July, it probably first comes down to the grassroots of getting the message out there. So the value with DigitalX is its ability to leverage capital markets to accrete more Bitcoin per share. Yep. And for those that may not have heard that term before, it's effectively the same as earnings per share. So when a company increases its earnings per share, you usually have a re-rate in the stock.
Yep.
And so if you just take Bitcoin at a headline number and keep it the same over 2 years, say 100,000 or 170 in Aussie, but say you own one share, if the company has the ability to say issue convertible notes that then convert and take on less dilution as a shareholder, the amount of Bitcoin you are actually holding, or the company is holding on your behalf for the share that you own, is higher.
Yep.
So in that sense, I believe there is it warrants the ability for a company to trade at a premium.
Yep.
But depending on how much that premium exists will come down to many things. One is the messaging, the promotion. Like if you look at MetaPlanet and what they've done, and I was just in Hong Kong, and Lee was in at the MetaPlanet shareholder meeting in Tokyo. He said that like the promotional work that that they have done there is just
well-oiled machine.
something like you've never ever seen before.
Yeah.
So look, we're not at that scale yet. Japan is also a unique situation. So Nikkei's been on its knees for 30 years, so it's desperate for.
Also, it's been very difficult for retail to purchase Bitcoin directly.
Correct.
In Japan. So, it's been going through, through Metaplanet. So, just for the listeners out there, Lee is Lee Travers, who's the DigitalX chairman. Okay, so there's, there's a clear strategy at DigitalX. Let's just talk about Australia for a second.
Yeah.
Because, it's an important part of the puzzle. There's obviously, it hasn't unlocked, wealth management, big super hasn't been able to allocate to the sector. We have a small allocation from AMP, who initially did it through the futures. But, I guess the point is that there has been very little engagement. There is a point in the time where hopefully the Labor government brings through draft legislation. And for instance, advisors can advise on crypto, and the custody and the exchange setup is all in a spot where institutions will feel comfortable to allocate to the sector. Okay, and then at that point, I guess it's DigitalX's turn to go out there and approach a champion to buy the stock, and then everything happens from that point, which would be, you can make your curve, your Bitcoin curve, with your structured notes. Is that how you see it playing out?
Yeah, we had a conversation briefly about a week ago just around the regs. Kind of the TLDR was we're still probably a year or two behind
the
US, but I think once those doors open up, that will certainly open up retail to just having a bit of a different view to crypto, as opposed to effectively being told don't invest into it. And some of it is limited to the inability for some of these advisors to get PI insurance to actually recommend it. So that in itself is a massive block. It takes the retail individual themselves to take the risk on and understand it without having any kind of formal guidance from regulators except themselves. So I hope that that changes sooner rather than later. Australia's certainly a little bit behind the curve here.
Yep.
But yeah, I think
we're all hoping that it moves forward.
Yeah, but by and large, that's kind of how I see it playing out.
Yeah. Okay, so we have a sense of how bullish DigitalX are, because they've done the $21.6 million placement, and within hours, they've filled it with Bitcoin. Now, to me, that is commitment. And that's seriously going, okay, yes, we believe in this. We're going to, every time we raise, we're going to put it straight into Bitcoin. Whereas previously, there hasn't been that commitment. So I think that sends a good message in that, that is your strategy. And that's what you're going to continue to build. And yes, there will be that target of 2,100 by 2027. So, that's exciting times for the firm. In the interim, whilst we wait for, for potentially institutional Australia to unlock and for DigitalX to trade at a significant premium.
You can always buy a market, mate.
Well, yeah, that's right. Well, it's at the market. It trades around the fair value, doesn't it, at the moment? So that's kind of, how it sits. For the people that like to go through the economics of DigitalX, in terms of minimizing the burn rate on an annual basis. Can you just sort of walk us through if there's anything going on that side?
Yeah, so significant costs have been cut out of the business.
Yep.
But I think minimizing the burn rate is super important, particularly for digital asset treasury. So the last couple of weeks, or even when I was at Animoca about a month ago, these treasury companies were literally popping up every day, or like people trying to get one going. Since then, there's been a bit of malaise around the whole the whole state of that industry. So a lot of these companies have actually started to trade closer to NAV. But look, I think minimizing that burn is super important, because you don't want to be tapping investors for money and that money going to pay overhead costs as opposed to purely driving the strategy itself, i.e. buying Bitcoin in an accretive manner.
Yeah.
So, my part of my job is to kind of look at this, and I'm kind of 7 days in at the moment, so pretty fresh. But get a view on how to take this company forward and get this thing going cash flow neutral to positive.
Yeah. Okay. So I don't follow stocks that closely because, I'm completely invested in the industry that we're in, the digital assets. And I feel that it's a higher beta play. However, I can just imagine the copper community right now hearing you saying that we're going to bring that burn rate right down. And I can just sense that it'll be lighting up as soon as this podcast drops, because they'll be going, that is exactly what we want to hear. We want to hear the burn rates down, and we want to hear that you're going to be building a Bitcoin treasury, and that this is going to be the vehicle that people can, get their Bitcoin exposure. So, it's I'm sure it'll be well received by the market. It'll just take some heavy lifting to get you guys through to the other end.
Yeah.
Yeah. So, and then, on the yield enhancement, there's always the Bitcoin Plus, Will.
Yeah.
We'll go into that later. I don't want to speak about myself. Okay. So, we've covered a lot today. I guess, we're both short of time. We've covered a lot. There's a lot to process there for the punters. But I guess the last question I've got would be, in 3 years' time, what does success look like for DigitalX and for yourself?
Yeah, 3 years' time, I think it would be achieving that initial goal of 2,100 BTC by 2027, or ideally surpassing that significantly. I think it's possible to do that. It just depends on the market dynamics at the time, and effectively the price of BTC.
Yeah.
So my internal view is that BTC will continue to go up with the debasement of currency. That is going to, I just don't think that or as Lynn Alden would say, like nothing stops that train, more referring it to in a fiscal sense, but
that's never going to change, is it?
I'm strongly of that view. So I think, look, A is to achieve that target, get the company into cash flow positive territory, start building out financial products that relate to Bitcoin. So that's something I really want to focus on.
Yep.
I believe there's a lot of people that hold their Bitcoin right now, but are unable to really utilize or leverage it into, say, loans at decent rates without having it rehypothecated, running through DeFi wrappers, causing CGT events. But there is a way around it. So we've got some thoughts that we would like to potentially implement in the future on that.
Yep.
And in terms of myself, look, I think having gone through many cycles and seen the bottom of the bottom to the top of the top in terms of crypto and what's involved, what excites me about DigitalX is it's simple. It's one product. It's a piece of corporate finance and capital structuring.
Yep.
In that sense, it's simple. Is it easy to do and execute on correctly? Not really, but it's just a very clear mandate.
Yep.
And that's what excites me.
That's very good. I've got to say, the listeners out there want something concrete from you, Will. They want to know that in 2027, when you reach 2,100 Bitcoin, that there is a tattoo on your arm or something like that. Is there anything that we can rest our laurels on?
If you're going to put me on the spot, I will get one if you get one.
Come on.
You name the placement.
I'm not sure,
and I'll get one.
Not sure Mrs. Prentible would let that get through to the.
You can't dish that out without having it reciprocated.
Damn it! I thought I'd try that.
Do I have to get one too?
Well, Menace, he'd look good with one.
Look, if you commit to it, I will.
Well, actually, our chairman, Drew, has committed to getting a tattoo of Jelly C as soon as we hit the $1 billion, and also as soon as the stable coin, so the AUDM hits hits 1 billion. So he's going to have one on each shoulder.
Okay.
So, Will, you don't want to be outdone.
Yeah, I think I'm going to pass on the Jelly C for the moment.
What about Lee? Can we get him something? Surely. I mean, this is
he's from Byron.
This is what will get going.
You got more chance.
We need something to really chant for, don't we? We need to, like everyone knows that. For instance, Lee and yourself.
Well, if we get to $1 billion, we'll
the 2,100 Bitcoin.
Yeah,
that's it. I mean, we get there and then we're on. It'll escalate.
I'll give Lee a call after this and see what he's out for.
Very good, mate. Well, we'll end it there. Will, thanks very much for coming on.
Yeah,
Menas, you're a champion. And thanks for all the listeners out there. Give us a like. Thanks very much.
Mate.
Good on you, mate.
Cheers.